As we bid goodbye to 2025, one big economic claim stands out. India is one of the world's fastest growing economies, with government data showing growth rebounded in 2025. But then a question stares us in the face. If the economy is doing so well, why are people struggling to get by, and why are elections being won with cash handouts? Let's break down what the numbers say, what people are feeling, and what 2025 really meant for the average Indian. Cash handouts and voter behavior. In November 2025, just 10 days before the Model Code of Conduct came into effect, Bihar started handing over Rs 10,000 cash to women and continued it through the electioneering. In total, 15.1 million women got the money. The result? A record women voter turnout. Similar women-centric cash schemes have helped parties win elections in Maharashtra, Assam, and several other states. Across India, millions of women now receive and depend on cash handouts, free food grains, and other subsidies to manage daily expenses. If GDP numbers are strong, why are cash handouts, especially to women, becoming so critical in winning elections?
More than 80 crore Indians get free ration. More than 100 million get PM Kisan, 6,000 rupees. Now increasingly, 16 states are giving cash handouts to women. That runs into many millions. And also you have highly subsidized LPG to, again, more than 100 million. So what the GDP numbers shows are not the right ones. The actual financial health has gone down.
Wages and deflation. On paper, India is growing. In reality, many families have seen their incomes fail to keep up with the cost of living. To understand this gap between growth and daily life, we need to look beyond GDP. One of the biggest warning signs of 2025 was extremely low inflation. At first glance, low inflation sounds like good news, but this time it reflected something else. People simply weren't spending. Why? Because wages barely grew. Nominal wages rose by just about 2% and real wage growth was close to zero, meaning income stagnated even as expenses continued to rise. Inflation stayed unusually low through 2025. But why is this being seen as a warning sign for the economy and for household incomes?
Low inflation, particularly when it falls below 2%, is a red flag. SBI research a few days back provided data which shows real wage growth has fallen to about 0.5% in this fiscal so far, which means income is not rising, so consumption is not rising, production is not rising. That is why low inflation is a very, very problematic thing.
Debt and savings. As income stalled, families turned to borrowing. Household debt rose to one of the highest levels seen in recent years. At the same time, net household savings fell as people dipped into assets like gold and long-term savings to survive. In simple terms, many households weren't saving for the future, they were borrowing to manage the present situation. Household debt has been rising steadily. What does this tell us about how Indian families are coping?
The latest RBI data shows that household debts have gone up to 41% of GDP. Financial health of households are actually declining. That is why debts are rising and total assets is falling.
Jobs without security. Jobs did grow in number, but their quality declined. Contract and informal work reached record levels, especially in manufacturing. Most new jobs offered low wages and no social protection. Jobs may be increasing on paper, but why hasn't this translated into better living for most workers?
Recently, we had organized manufacturing's jobs data, which shows contractual work has gone up to 27-year high of 42%. Again, this means low wages, no social security, no job security because these are short-term jobs. So our jobs are not going, and we have had enough data. I mentioned earlier, the wages are stagnant. Wage growth is just about 0.5% in this fiscal. So no, jobs are not growing, at least good quality jobs are not growing, and 20% of our workers are unpaid workers. So that is a very grim situation, and there is no sign of it improving next year.
Rupee fall and weak markets. The rupee also weakened sharply in 2025, making imports more expensive. This quietly pushed up the cost for fuel, electronics, and other consumer durables. Meanwhile, stock market returns, a key income source for many middle class families, remain weaker than long term averages. So, how did this combination affect household expenses, savings, and middle class finances?
Rupee has depreciated very fast this year, crossing the psychological barrier of 90 rupees per dollar multiple times this year. When rupee falls, the foreign investors, particularly those who are investing in capital market, stock market, their return goes down. So they will pull out more and more money. The Indian companies are also investing more abroad, while their investment in domestic market remains very tepid and far below what it was over a decade ago.
Looking at the future in 2026. As 2025 ends, concerns are growing about what lies in future. One major worry is the weakening of MNREGA, the Rural Employment Guarantee Scheme that acted as a safety net for millions of families every single year for close to 2 decades. Given these situations, what does 2026 look like?
There is no reason to believe that 2026 will be better because there is no indication of quality jobs going up or wages and salaries going up. There is no indication so far. The only job scheme that has been working is the Rural Job Guarantee Scheme, NREGA, caters to about 80 to 90 million individuals, about 70 million households, rural households. Now, they form about over 30% of rural households. So if you take that out, and about 65% population is based in rural area, you have pulled out one big safety net. And so what will prevent consumption to go down, and consequently the production of industries to go down, and the GDP growth to fall further? I don't foresee any improvement in 2026. If at all, it's going to go down.
Looking forward to 2026, the numbers tell one story, but daily life tells another. Growth returned, but wages stagnated. Jobs increased, but stability did not. And millions relied on handouts to get throughout the year. The big question now is whether 2026 will bridge this gap or widen it further.